Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Nestle India, a top stock, but how is the valuations and where you should buy it. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position for any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Nestle, a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. You also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up on short-term, long-term calls. Plus, if you pay $100 upfront, then you get 1 year access by paying for 10 months. So you get 25% discount on your $10 membership. For detailed market or company talk, you can directly email me and we can work things out. Now about the company. Formally established in 1959, Nestle India started operations in 1912. So basically, Nestle started operations in India in 1912 as Nestle Agro Swiss Condensed Milk Company Export Limited, and its first factory was established in Punjab in 1961. Manufactures top quality chocolates and milk products. We all know about it. It is one of the biggest brands in this space and has been a market leader for many years, and that is why it has given stellar returns over the last 15-20 years. But over the last 5 years, things have been up and down, and although if somebody would have bought at the lows of probably 2016, then things would have been uh, even better for those investors, but those buying at highs have not got a very stellar return. If you look at the financials of the company, then these are Q4 FY21 numbers versus FY20. So the last quarter numbers, they were pretty decent. 8.6% sales growth, 15% profit growth. There is no debt. A return on equity of 60% is what's driving the stock at 70-80 multiple, and an operating profit margin of 26% is stellar. So there is no question that numbers are top of the class. If somebody has to benchmark consumer stocks with numbers, they benchmark with the ROEs and margins of something like a Nestle or the likes. High institution promoter holding, there is only 13% free float, and large institutions always buy into the stock whenever there is a 15%, 10 to 15% dip, or there's a greater dip like we had in March. They buy even big. So why is the euphoria in the stock, and why is everybody gung ho on it and keep buying the stock even at such high valuations of 80, 90 times earnings? Basically, it is moat and leadership, and it is the fact that the kind of products that they are selling, there is no competition to it. There is a huge competitive advantage of Nestle over others. Plus, with the shift from the unorganized to the organized sector over the last 5 years, these companies like Nestle, the giants, have gained even more traction and have gained even more momentum in terms of market share, and that will just continue to happen as people earn more, economies become better, and probably going forward Indian economy will become even better. People will like to buy branded products, even in food products, even in buying into chocolates, etc. So this is something that is going to continuously grow at a steady pace, and that is why people want to park some of their money into these kind of stocks, which can give them better returns than FD, and yet at probably a reasonable satisfaction, and they can rest peacefully, sleep well, and then just keep on minting money year on year. 15-16% CAGR, that has been the growth rate of the stock of Nestle. Exceptional return ratios, we have seen that ROE of 60% is just extraordinary. There are other companies which have that, very few companies which have that in India, and that also drives the stock forward because people don't want to get into uncertainties. There are many investors, 20 to 25% investors, who want just stable returns better than FDs, and they get into something like a Nestle for that. Even Asian Paints, Pidilite are of those types, but Nestle is a brand that has been tried and tested in all sorts of environments over the last 20 years, and have delivered. Top level management, no question about the management and the kind of numbers they end up producing every time. Longevity of business is there, so there is no point. I mean, if you look at it, there is no threat to the kind of business that Nestle come up with, and it is going to continuously perform over the next 20, 10, 15, 20 years. So there is the longevity of it. There is a certainty of the kind of return that you'll get over the next decade, 2 decades, and so people buy it for generations and keep it and transfer it from one generation to another. These are the sort of stocks that keep doing that, and quality will always sell at premium, and that is what we are seeing today. That the stock prices keep on going up at that rate of 14-15%, in some duration of 4 5 years at 17 to 20%. So the rate could be up and down, but the stock prices keep going up, and this is why it sells at premium, because most of the individuals understand that this is where consistent returns would be made. So how is the stock technicals, and then I'll come to the valuations part. There's strong support between the 15,000 to 16,000 level. So if in a long term basis, the support is around 15,500 to 15,700. The stock has run up a bit in the last couple of weeks or so, from 16,500 to 17,800. It has run up 3x from those lows of 5,000, nearly 4, 3.5x from that 4.5 5,000 levels when we had that Maggie issue. And those are the opportunities that one has to really grab in order to buy such companies. We had one such opportunity in Page Industries also in 2016 when the stock went into 4 digit, around 9,000 or 9,500. It dipped to intraday, I remember, in February of 2016, and then the stock went up. So these are opportunities in such kind of stocks to really get into. You look at Page Industries at 32,000 now, people want to buy it. Nestle, any kind of dips towards 16,000 is a very very big buying opportunity. If somebody wants consistent 14-15% return, it may be starting a bull run. It may not go back to 16,000. I think once 18,100 is taken out, we could be seeing Nestle at new highs. We could be seeing beyond 20,000, 22,000, and you can buy at even these levels. So this is the beauty of such stocks, that you can buy at current levels, you can buy at dips or even slightly higher level. If you have a good 5 6 year time frame, you're going to make decent amount of money at a consistent pace. So what needs to be done? That is something that one needs to understand. You can buy close to 16,000 levels, and in terms of valuations, it is stretched. So I was talking about valuations. The valuations are stretched. It is trading at 70-75 times earnings, but you need to understand that once economy opens up even more, the earnings are going to get better. So the PE is slightly on a higher side. It is a misnomer in that regard, but if we look at FY23 numbers, then it is trading at between 60 to 70 times, which is still at a 15% 20% discount, and that is why I see the stock going to 20,000 and beyond in the next 2 years. I won't be surprised if we see it at 21,500 to 22,000. If you get an opportunity, buy it below 17,000. Best opportunity would be at 16,000. That would be a great opportunity to get into. It is a generational stock. You cannot make money in this big time in 1 or 2 years. It has already gone up to becoming a large cap company. So here you expect 14 to 15% returns year on year, and if you want to really trade on it on a 6 8 months basis, then wait for massive declines due to some news, and then